It's Tuesday night around 7 o'clock. I wanted to follow up yesterday's video with another video because today's action was somewhat significant in the stock market. The chart we're looking at right here is the S&P 500. So it's the SPX, or the cash S&P 500. And all of the indexes today did break below the lower boundary of the flag pattern I noted recently. So this is the lower boundary of that flag. We see the S&P 500 close below that today. This orange line here projects the measured move of the flag pattern, so it projects this pull down from the bottom of the flag, and that takes us down to around the December low, so down around 1200. And if this is a leg down in a bear market, so if we've actually completed a bull market as of here and we are in a bear market and destined for lower lows, this red line projects the average leg down of all the legs down in bear markets since the year 2000. So that would be any consecutive price movement without a 1 month or greater counter trend advance during it. So if we're looking at the price going down consistently without any type of a major rebound for a month or more. The average since the year 2000 has been about 26%. It's taken about 3 to 4 months, close to 4 months. So that would put us into November down around the 1,000 mark. If this is a typical leg down in the stock market. So those are some things you can keep on price charts to project. Track how the market is developing. This line here is called a speed line. So if you look at the first, after the high is in the first swing low, and then you draw, you connect that low to the other swing lows of the decline so far, that creates what's called a speed line. And oftentimes, if the market does make an aggressive decline, the price will come down to that speed line. And a similar thing happened here last year, where we had an initial decline off the high. And we put in that June low before July rebound. The market came down and touched that speed line, and then actually, when it bottomed, it had to come back above the speed line and then retested it from the top there. So that's something to look for here, that speed line projection. I think this move, I think we're likely to see this market come down and at least clip this December low, possibly also the November low, and probably do that before this blue line here. So let's say before the end of September, see the market below 1200 would be my estimation as about the minimum target on this. If we see the market aggressively advance down the whole way below the October lows without any intermittent rebound there, then that would be an indication that a pattern completed here at this lower high in the market. Whereas if we see a decline and then a rebound after that, that may be an indication that we're seeing a pattern actually complete at that high right there, something like an A, B, C, and then a big D wave back down to here, and then an E wave up. But I'll update as that unfolds there, but that's just some projection areas to look for of what would be typical for the market to do from this point. Dow, this is a 2-hour chart, but this line up here, the Dow has also broken that flag line. The Nasdaq broke the flag line as well from there to there, so it closed below that. New York Stock Exchange actually broke it yesterday, or at least held right at it, and then today it broke below that. This pink line here is just the prior support level, and then this line projects the like a measured move type of move down from that line there. So those are all the indexes are basically saying that an important phase of the market is likely complete. We're likely to see some continuation from this point. Now, that being said, we already talked about most of that over the last couple of days, but I want to point out that Apple reported earnings today after hours, and I've showed some of these charts before, but let me click over to here, Yahoo. So Apple reported earnings, and after a great run-up for the last 3 years, it looks like that run-up might be done. It traded down about 5%, so it closed the day at around 600, and it's trading down around 570 after hours. So here's where it closed today, and it's indicated to open somewhere around 570 tomorrow if there's not much change in the pre-market. What is significant here is this pink uptrend line. You see how the market has repeatedly found support at that trend line, and it touched it just again here this week or Friday, and it held above that. But now with this gap down, we're going to break that trend line with a gap down. Any trend line breaks with a gap down, especially a big gap down, are very significant. So this I would say undoubtedly indicates that this is a failed basing pattern in Apple, and we should see Apple move probably relatively quickly down below this 520 level where the bottom of this base is. When you look at a cup with handle or some type of a basing chart pattern like that fails, it does not break out, it will almost invariably make a quick move back below the low of the base there. So that would be the initial target. I think it'll actually go a lot lower than that. I still think this gap up down here probably needs to be filled at a minimum on this decline. But for those who have not studied what happens with growth stocks when they top, you know, it's easy when you look back. Let's click over to weekly chart on Apple, and you see a stock that has gone from $6 to $600. So it's literally multiplied 100 times since 2003. You know, it's advanced 100% since last fall, practically, almost. You know, it's easy to think that these stocks are invincible, or how can they go down? Apple's such a good company, but they're all like that. Every company that's ever made great moves, you know, you think that at the top, but at some point, you know, they're going to experience corrections, and so they'll tend to fall very hard and very fast once they do top out. So what to look for here is I think Apple is the largest weighted stock in the stock index, and you know, if this basing pattern breaks down and we see a correction here, that may very well be an indication that the stock market is due for a bear market or a very significant correction of this bull market. You've had multiple run-ups in Apple, and now it's seeming to fail to break out of that. So that's what to look for tomorrow. We'll probably see a gap down in the stock indexes tomorrow. The futures are down a bit right now. Nasdaq's down about 1%. So likely to see some continuation on that move, and that's what I would be looking for as far as for stocks, is to have some continuation down into this coming month. This is a weekly chart of the S&P 500, and what we see here is a 5-period stochastics, which I've mentioned on recent videos, and it got overbought and has now turned down nicely into a sell signal. However, we'd want to see this low broken, so essentially the last couple week support level broken here as confirmation that this sell signal is valid there. So I think we may see that tomorrow with the gap down on Apple. We may see the market actually break that level. So that would be a indication that we are likely to see a weekly time frame pullback here. The daily time frame, let me click over to the Russell 2000. The daily time frame is getting close to oversold, so in another day to two we could be oversold there. If one is short from these levels that I had talked about here over the last few weeks, you know, one option is to take a partial profit as the daily becomes oversold, move the stop down to break even or slightly better, and then switch over to a weekly chart and wait for that to get down at least below 50, and then if it gets below 50 and you see the daily chart then turn into so if the weekly is below 50 and then you see the daily chart get oversold and turn into a buy signal, then exit the remainder of the position there. But at this point, I think the odds favor some significant continuation down from here. So if you shorted at these levels, as I had kind of suggested the last few weeks here, you know, definitely got to have a stop up above these levels here. But you know, I think it should be safe to hold that for a little bit longer term trade there. So that's all for this update. I want to update gold. I have some stuff that I think will be interesting and informative on that. It's kind of doing nothing right now, so it's obviously anticipating something here in the market, and we should see a breakout on that, I think, within the next couple weeks. I will update that here probably this week at some point. Have a great night.